Hello guys, welcome to another video. So now I'm going to show you how to analyze gold from the highest time frame until the smallest time frame where you'll be executing. So if you like this style of trading and you feel like you want to see more videos like this, please don't forget to like and subscribe. So we always start with the highest time frame, and this is our monthly chart, and we can see our gold that it's basically there's some momentum to the downside for a while, for a couple of months, and this is the nearest resistance we got, this one here. This is our resistance and this is our support. So that's our support, that's our resistance, and the price now seems like there's some short term, or for the past month and a half or so, the price has found the ground and now is taking off, and it ended up giving us what we call bullish engulfing. So from where we are currently, it looks like we do have enough space to go there, and also have enough space to go to the downside. So it wouldn't be a bad idea when you're there on your time frame, smaller ones, trying to sell or buy. So now let's check what the weekly is saying. So that's all that we can take from this monthly chart. So now we are on our weekly chart, and we can see that on our weekly chart, the weekly was very much bearish, and we had the bearish trend line somewhere there, and we had this as our nearest area of resistance. And also, when all of that was happening, the price did go and touch it there. If you've been on this channel for some time, I'm pretty sure you will remember this setup when you had the trades from there, and then we got a sell to the downside. And the sign that the bears were becoming weak now, as much as we're pushing down strongly like this, the signs were there that they are no longer as strong as how they used to be, because of what you can see. You are here, failing to create a new high, failing to create a new high. This is a sign that you're not going anywhere. You're not going anywhere. Remember, when you're going to the downside, we need to see those lower lows. We need to see those lower lows. So the moment you are failing to give us a new low, we can see that the person who was pushing to the downside is no longer as strong as how they used to be. And then from there, the price took off and then went to the upside. And when it went to the upside, what happened was that it broke the trend line, it broke the area of resistance, and that's when we can say that our weekly currently is bullish. All right, the weekly is bullish, and this is the nearest support, and this is the nearest. I'm not sure if this was taken out. If it was, then this would be your nearest resistance. And we know we are bullish, we are around the support, the resistance. So it wouldn't be a bad idea for you to get like a pullback and maybe before it takes off. But when you look at the current candlestick that we have here on weekly, we can see that we closed as what? Bullish rejection candlestick, and this could suggest that next week or the next few weeks the price could go up there. But I'm not saying when the market opens you just need to go there and buy. No, I'm just saying on a weekly chart we can see that this week it ended with some bullish pressure or bullish momentum in the last minutes or whatever. So because you can see that the bourse rejected the price, right? But it doesn't mean that, as you can see, we had the same thing here with the price had something like this, and then they continued going to the upside. So I'm just saying, if you're planning to sell, you need to remember that maybe you can just get a smash and grab trade. It's not a long-term thing, because this could suggest that the following week before it ends will be somewhere there, but we'll see. So let's check the daily chart. Let's check the daily chart. Our daily chart looks something like this. So let's fix this one here. Okay, so by looking at this, we can see that we actually went higher than 8. So it means on that weekly chart, this can be our nearest resistance. On this weekly chart, it means currently the nearest resistance is that one, the nearest support is this one. So we don't have anything here, right? So it means, that's what I'm saying, we've got a chance to go there, but it doesn't mean we cannot play here before going there. So that's why I'm saying, when it's smaller time frames, you can even get some short-term trades for as long as you know that you're not going to push them for too long, because of what the structures that you are having here and what you had on monthly when you had that bullish engulfing, a very strong one. So you can see that you don't want to say you'll sell and hold for 2 weeks, 3 months, whatever. So you just want to say, I'm selling on whatever time frame, maybe H1, H4, and then I'll be targeting H1, H4 area of support. Then I'm out. You don't want to push it too much. So we were about to do the daily chart, and we said it looks something like this. And we know that this one was taken out, so our next zones are somewhere up there. We can take this one here. So that's your daily area of resistance, and this is your daily area of support. So this one cannot be a support, and those that are in the mentorship, they know, right? You have to have rules, and you must be able to identify the valid zone. So here in this case, a valid zone is here, and the valid resistance is there. And the price, you can see that it sort of touched the resistance and then it got rejected, and now it's going back again. So that resistance is no longer it's no longer how can I put this, it's no longer fresh, right? So for that reason, we know that something that's no longer fresh, the more it is hit, it becomes weak, right? And again, there's a sign that the bears could be weak, because remember, when you're coming from a resistance, we expect you to go to a support. We expect the sellers here to push to at least the support, and in this case, what we had, the sellers from there, the sellers from here, they only pushed until there. So that's a weakness. The same thing that we saw on when the price was failing to create a new high. This is a weak, when you're a seller and you're failing to create a new low. That's weakness, right? So here you came from the resistance, but you failed to go to at least the support. Already the bulls are pushing you back. So that's why we can say that we wouldn't be surprised if it continues up. The same thing that we saw on weekly, when we said because of this, we wouldn't be surprised if it goes up to that. So again, we are seeing that on daily, because we're having what? The sellers fail to come to at least there. Now they are back there to a zone that is not fresh. So it can be taken up, right? But we will see. So currently, this being our daily, it has a bullish trend line there. It has a support here. It has a resistance here. It has a resistance there. So we are at the resistance. Maybe if you're someone that's trading smaller time frames with confirmation, you can try get some selling trades there, because buying currently not a good idea unless if you wait for the price to do this and then you get the pullback and then you sell that. Because currently, I mean, it is not a good idea for you to try and sell when the price is inside a support, I mean a resistance. You have got a lot of sellers there, a lot of selling orders there, but you want to be a buyer. That's not good. So let's check H4 and see if we can't get a short-term signal to the downside. So our H4 looks like this, right? Remember, this is the point where the price touched that support, that resistance, the daily resistance for the first time. And we did have, when you're going up, we did have a bullish trend line there. We did have a support there. We did have another one here. And the price, when it hit that daily resistance, remember, it then came back. When it came back, it broke this bullish trend line. It broke two areas of support. That's when you're like, my H4 is to the downside. So this is the resistance that was responsible for all of that. So now it's not a bad idea for you to sell from that, because remember we said currently if you're trying to sell, it will be a short-term thing. Maybe you'll hold it for a day or two depending on your risk appetite, right? But it's not something that you can say I'll execute and then maybe hold it for 4 weeks or whatever. No, currently the bigger guys, the bigger time frames don't agree with that. But here on a smaller time frame, you can say anywhere from here, anywhere from there, of which we touched it, anywhere from there, we are very much allowed to search for trades to go to the downside. And you can see already that the price was having some rejection candlesticks. It's just that it's a Friday, and I do not like to execute trades on Friday unless if it's on derivative broker, because these ones you execute on Friday, you don't know what's going to happen over the weekend, and then come Monday when the market opens, you start with a gap to the upside, then the entire setup is gone. So that's why you'll never see me executing on gold, Nasdaq, or on Friday, unless if it's Friday morning and then I know that it's just a short term intraday or scalping kind of a trade where I'll be exiting it the same day. Otherwise, a trade that will want me, require me to hold it over a weekend, I'm not going to execute on Friday. So here we are saying that because given the fact that the price currently is inside a daily resistance, but the negative thing is that resistance is not fresh. And also when you check the weekly was closed with the bullish rejection candlestick, and also on daily, because we're saying the zone was not fresh, the resistance, it pushed the price down for the first time, but when it pushed it down, it failed to continue pushing to the downside until we touched the support. That's a sign of weakness. So as much as we'll be selling here, there's still some things that are going against that. You remember, you need to check both sides of the story and decide which one you want to go with. As much as I can say that there are those that are pushing up the factors, but they are more on the higher time frame. They are more for long term, so I can get my sell trades there, and I'll be very, very strict with the stop loss. So if you feel like you've gotten enough confirmation, you can go in. But remember, without confirmation. Here you don't have a trade, but I'm just saying that sometime next week when the market opens, it wouldn't be a bad idea. I wouldn't be surprised if I see the price, pull into the downside, maybe to somewhere around there at least, or even lower than that. But it's possible that it can still go up and break that resistance and carry on going up. And when that happens, then it means this guy will be in play, because we said we got this and we've been surprised if it goes there. So now my prediction is that it's not going to go there immediately. So it needs to give me something like this first, maybe. I don't know how deep this is going to be, but I don't think when the market opens, it will just carry on shooting to the upside, right? So that's my prediction. When you get some confirmation next week, it's really not a bad idea for you to search for trades to go to the downside. Without the confirmation, you don't have a trade. So basically, this is how you can do the top-down analysis on gold. This is how you come up with setups. You start with the higher time frame, get a bigger picture, go down, make a decision there. Try and link that with what you saw on the bigger time frame when you're making your decision. All right, so if you like this style of trading, guys, do not forget to like or subscribe. It does not cost anything, but rather it will push the content to some of your friends, other friends, and then they will also be able to get this information for free. Don't be stingy with the free information. All right, guys, I'm going to end this one here, and then I'll see you in the next one. Thank you.